Hey, welcome everybody to the 40 Finance channel. We've got just a few more trading days left here in the month of November. And then, of course, we got the last month of the year in December for stocks coming up right around the corner. So I thought it'd be a good time to take the pulse of the QQQ and the TQQQ, both of which have been the focus of many of my videos over the past several months. So that's what we're going to do. We're going to look at fundamental factors, technical factors, and other sort of momentum indicators to get maybe like a short-term forecast on which way these stocks could run, not only through the end of this year, but perhaps into the first few weeks of next year as well. Now, before we jump in with all the holiday sales going on and Black Fridays and Cyber Mondays, keep in mind Seeking Alpha still has that special $99 deal for the next 12 months. So if you're looking for a robust and affordable stock market research platform, this is definitely the deal for you. Check out that link in the description. Okay, in terms of QQQ, let's take a look at the past month. This is a 1-month chart, so roughly 30 days. And if we kind of eyeball November 1st on here, you were at approximately 275 when November started. And today, or at least right now, here on the Wednesday before Thanksgiving, you're at 286. So not a bad month for QQQ, particularly when you compare that year to date where you're down 28%. If you bought one share on January 1st, that share's down 28%. Now, most of us, of course, use dollar cost averaging with something like the Qs. I also use DCA with the TQQQ, which is the 3x leverage version of QQQ. I've got a million different videos with information on that one, all included in the links below. But we've got the Qs at 286. We've got the TQQQ is coming in at 2215. If we do that same analysis where we're looking for the start of November, okay, that one was at, let's just call it $20. $20, and now it is only $22. So not a huge ramp up, maybe for what some people would expect, but keep in mind, look at this volatility, okay? So you started the month, you had the dip down, you had the dip up to the top, which came in around 2371 or so, and then you had these up and down days. So that volatility is what's really crept into some of the gains on the TQQQ. This is just part of the process. But overall, when you compare it from a year-to-date perspective, in which you're minus 74% because it's 3x the performance of the QQQ, this past month in November hasn't been that bad when you back test it against some of the previous months of the year. Now, even though TQQQ is a different ticker and really behaves a little bit different than the Qs in general with that 3x leverage, we're still going to take our fundamental and technical research of the regular Qs, to make our best guess on where the short term is heading for the TQs. Okay, now with the regular Qs, as far as fundamental analysis goes, we have valuation, right? But usually the more important thing, particularly with QQQ stocks, is going to be growth prospects, right? Growth on the top line, growth on the bottom line. It's just the nature of this mostly tech stock orientated fund. It's just the way that it goes. So what I like to do is take the top holdings, and of the top holdings, really the top 10 represent about 50% of the fund by itself. And then you start to put together a bigger list like I've done here in Seeking Alpha. I don't know if it's roughly 25 or 30 of the top holdings, and this is sorted by market cap. You get a pretty good pulse of what's going on within the holdings. And the key things we need from a fundamental standpoint is we need earnings growth and we need revenue growth, right? Top line and bottom line. And once that growth starts to dissipate, any stock on the planet is going to be under extreme pressure when that happens. So luckily, we have an easy way to look at this for the future, at least from a percentage basis. So you got Apple here on the top, and you've got year over year revenue to date, how that has played out this year. So Apple plus 7%. How is that going to compare to next year, or at least next year's projections? And it looks like Apple's growth will slow slightly, but you still have revenue growth, right? So you're going from 7% growth to 5%, so it's still there. And when you make millions and billions of dollars like Apple does, well, 5% sometimes is still a pretty good news story. Microsoft, same example, okay? You've got slowing growth, but you still have double digits on the top line. So I would put that down as a positive. Google, they're actually increasing from a projection standpoint, they're increasing their growth percentage. So from 18% to maybe 19% when you average it all in. Amazon, they're projected to grow faster next year, 10% to 13%. Tesla, basically holding steady, although a little step back from 59 to 55. And this is revenue line, keep that in mind. NVIDIA, things looking pretty decent for NVIDIA. Meta, a lot of people wouldn't even believe Meta revenue year over year plus 5%. Looks like that, at least from a projection standpoint, is true, and next year could reach double digits. And what else do we have here? You got Pepsi slowing but still growing. Costco, same thing. AVGO, same thing. And so if you look at this revenue forward column, and I think that this is the big thing to call out, despite all the negative news that is in the news right now, everybody on this list, except for Intel, is projected to grow their revenues. Okay? That's a pretty big story. Not to mention everybody on this list, or most people on this list, have double-digit revenue growth projected for next year. All right? So that's a pretty solid look ahead to the next year. Now let's go to bottom line. All right, let's talk about EPS. I'm going to scoot this over a little bit. You can follow along. We are right here. EPS year over year. And right at the top of the list, we got Apple. They grew EPS 9%. They could add another 6% next year. Microsoft could add another 10% or more next year to their EPS line. And this is the type of news we're looking for from a fundamental analysis, because if you can keep growing that EPS, not always sure which way the valuation multiple is going to go, particularly over the short term, but building a strong base of EPS, at least over the long term, should continue to build the value of the stocks that you own. And look at Google. They could end this year minus 3% on the EPS line and then add 22% next year. That would be pretty good news from a fundamental standpoint. Amazon, this is where Amazon gets in some trouble. This year, their EPS just got absolutely destroyed due to costs. Right now, there's still a little bit of a warning sign here because it could go down another minus 7% if the projections come to fruition. So just be careful on your spots on Amazon. Frankly, I like the stock just from a worldwide growth leader, but that's why it's having some trouble right now. Tesla, 218% this year. Could they add another 100% growth to the EPS line next year? It seems possible. With Tesla, obviously, you have to fight the multiple, right? How much are you willing to pay for that growth? And that's what the market's trying to figure out. NVIDIA, minus 27% this year. They took a hit on the EPS line, but hopefully getting back to growth next year. And if we eyeball the whole category as far as EPS forward, we have 1, 2, 3. Okay, we have 3 of these, give or take 25, 30 stocks that I have here. 3 of them are moving backwards on EPS growth, are showing negative growth on the EPS line. The rest of these companies, and there are several in the double digits, that are growing their EPS, okay? So I feel pretty good about the QQQ from a valuation perspective or a sales and revenue growth perspective. Now, in the recent past, if you go to 2021 and then even into 2022, obviously, as more of the actions from the Fed came out, we saw multiples come down, right? And then we also saw projections in earnings and revenue projections come down as the year went on. So there's still a cautionary tale here, because even though these projections look good right now, as we're in November, there's always a chance that something else happens in the world, or the Fed doesn't move in ways that we would have projected, and these can come down. I would say on the bright side of it all is, despite what you're hearing in the news, at least today, there are plenty of positives to be found in the projections for next year. All right, so that was a quick look at the fundamental data that we have, at least on QQQ holdings. Keep in mind, with an ETF like this, a market cap weighted ETF, it's going to be difficult to kind of project the EPS for the whole group, right? So you're not going to see a lot of charts out there with P ratio for QQQ, and you're certainly not going to see maybe any that are going to project it in advance. You might get some TTM PE ratios, but you're rarely going to see a forward PE ratio, because the fact of the matter is, if something like Apple or Microsoft takes a hit, then the calculations for that EPS line for the ETF as a whole are going to take a monster hit, and it just changes too much every day to really carry that kind of calculation. So that's why I kind of looked at things from a holdings view. But let's look into like more of a technical / momentum view for QQQ and see where things stand here at the end of November. And I'm going to scroll down. This is all price performance type stuff. And you can see, this 1 month performance we talked about earlier, 3.82%. You compare that to Seeking Alpha's medium, which is all ETFs. QQQ wasn't too far behind, right? For as much slack as it takes, being tech and high growth and high multiple, all ETFs were up 5.88%, QQQ 3.8%, not bad at all. Then you go on 6 months, Q's minus 0.5%, and the median was minus 1%. So they actually outperformed over the past 6 months. And that might seem crazy because of where they started in January. But keep in mind, 6 months ago, heck, we're in November. You're talking about May, right? 6 months ago was May, and the huge lop-off of value, a lot of it came in January and February. Now you switch to 1 year total return, and you start including some sour months like December, January, and February in the past, then QQQ is starting to separate to the downside, minus 28% versus minus 12%. But we're really looking ahead here, right? We know what happened in the past. And quite honestly, as bad as things have been, when you think about the 3-year and 5-year total return, and you compare that to the median, which is all ETFs, QQQ is still winning by a mile against the all ETFs. So the question, of course, for everyone, before they jump into anything like this or the TQQQ, is you either believe in it or you don't. You either think Apple, Google, Microsoft, etc. Are going to lead the next wave of change and innovation, or you don't. And that's okay. It doesn't matter either way. I believe in that firmly. And so when I think about the future from a dollar cost average standpoint, I'm not super duper concerned. Obviously, that's just my opinion. Everybody's got to figure out what works best for them. All right, but we talked about momentum, and I wanted to highlight a couple things on the momentum side. So I'm going to go through these charts here. Let's start on the moving averages. All right, so obviously, if you're into a momentum trading or technical trading, you'll see that a lot of people spend time on the 50-day and 200-day moving averages. Now, for the record, I am no technical chartiste, if you will, and it's really not the foundation of any investments that I make. But I do monitor or look at this kind of done-for-you approach that Seeking Alpha offers. And here we see on the 50-day simple moving average that we are plus 3% over the 50-day as of today. Now, the 200-day, which is one that a lot of people wait for, you're still down, -7%. There are plenty of traders out there that want to see this 200-day moving average. They want to see the price go over the 200-day moving average before they get too excited. Then you would potentially be looking at a strong run for the Qs, because I know that there's just a gazillion people who are waiting for that to happen. We'll see if they actually get out their wallet when the day comes. And real quick, I should have called that number out. As of November 22nd, the 200-day is 307.69. So today we're at whatever, 287. Roughly $20, I guess you would say. It's got to get another $20 up on QQQ, and it should cross that 200-day, and we'll see where momentum takes it after that happens. All right, the next thing to look at for QQQ is the asset flow. Has it been taking in more money? You know, is there more buyers than sellers? That's kind of what you get here. And the assets under management change over the past month has been -7.8%. That seems a little crazy, but don't forget, at the very beginning of November, after the first couple of days, we had that big dip. So there was a lot of selling going on, and you compare that to the all ETFs, and you're at -3.28%. And I guess the only thing I could say here is at least it's improving. Not necessarily the greatest sign in the world, but you know, over the past 6 months, -22%. But now you've essentially lowered that decline over the past 1 month. Either way, we really would like to see net positive on assets under management for the Qs and a lot of different ETFs as time moves on. And this is going to be a particularly interesting story as we get into December, because you're going to see everybody start talking about tax loss harvesting. You know, at least most honest people have plenty of tax loss harvesting opportunities in their portfolio. I certainly have an endless array if I choose to do so. I did book a few wins this year that I do need to offset with losses somewhere before, you know, December 31. I don't anticipate that any of my harvesting, though, will involve any of my shares of QQQ or TQQQ. All right, the next thing to look at here is the different ratings for the QQQ. And with Seeking Alpha, you sort of get 3 in 1. You get their quant formula. We can also check on, which we will, the Seeking Alpha authors rating. And then Wall Street, I'll have to look at the Wall Street one. I don't think most Wall Street analysts make projections on ETFs. But kicking off with the quant rating here for Seeking Alpha, this is Seeking Alpha's metric. They have a buy signal for QQQ. It's not the strongest. The strongest buy would be a 5, but you get a 3.65. And from a grade standpoint, you got momentum at a B. Expenses, which probably doesn't change much, B+. Dividends probably doesn't change much, B. Risk is at a D, so that would insinuate a higher level of risk for the Qs, which I think makes sense. Asset flows, they're given it A+. That's a little different than the chart we saw just a second ago, but they're saying A+ right now on asset flows. There's no Wall Street ratings for QQQ, and that's just because it's an ETF. Okay, so people who are in that game don't write about funds. They usually are out there trying to make stock picks. Now, as far as Seeking Alpha authors, which are people that just write on the website, you have 16 over the last 30 days, 5 buys, 5 holds, 6 sells. So that's sort of interesting. You got 6 people selling, but when you balance out the scoring, it gives you a hold at 2.93 just for Seeking Alpha authors. That's just their scores put all together. It has nothing to do with the quant score or the Wall Street score. So bottom line, since we don't have Wall Street, if you go to this rating summary, you got the quant score giving it, you know, give or take a buy, 3.65. It trends above 3, so it's a buy signal. And you got Seeking Alpha authors coming in with 2.93, which is below the 3, and therefore is a hold, at least for right now. All right, so if we put all those data points together, you know, what's my opinion on the forecast for the QQQ? Now, obviously, my long-term forecast is bullish, to the nines, if you want to start talking about 3 to 5 years. In the short term, though, the way I see things is we're still in a safe zone, so to speak, to at least dollar cost average a little bit at a time. The uncertainties are still out there. You still have the Russian invasion. We still don't know which way the Fed's going to go. We have a huge CPI report coming up on December 15th. All of these things could definitely weigh the Qs down. I also forgot about, all the consumer sentiment scores that are going to come out during shopping periods. And, will Black Friday be a hit or a miss? There's plenty of days that could come down in the Qs. There's no other way to say it. So if you're risk averse, maybe you take your money off the table. What I don't want to miss personally for me, and that's why I'm on this page here, is the spikes in the Q almost come out of nowhere, right? And if you're not in the market when those top 3, 4, 5, 6 days happen in a year, you miss out on quite a bit of opportunity. And we just had one of those days, looks like on November 9th, okay? Where you went from whatever this is, 263 to 282. And if you miss those days, or you miss stretches like this, 9/6 through 9/12, where you went 293 up to 310, then you're really killing yourself because it's impossible to project those days, right? So for me personally, I am comfortable enough with the forecast, given the data points that I just shared with you guys. I don't think it's an imminent colossal meltdown. That's just my take. All right, doesn't mean that we're returning to all-time highs tomorrow, but for me anyhow, my forecast is clear enough to keep adding a little bit here and there like I've been doing. I've been literally buy one share at a time and just keep plugging away. It's not always every week. It's not always on Monday. It's just kind of a gut feel as we sort of go through this period. But one thing is for sure is if we do hit another big rebound, you want to already be in the market when that process starts. All right, guys, thanks so much for watching. Don't forget to check out that Seeking Alpha special offer in the description. My link's down there if you want to support the channel as well. Thank you as always. We'll see you on the next video.